Okay, good afternoon, one and all. Good afternoon. Hopefully you are well. Just a quick sound check. Make sure we're coming through. Okay, that's not going to. Just a quick sound check. Make sure we're coming through. Okay. Let's have a look. Who is in the house today? Now we have got. I can see me. Hi, I don't know who you are. But hello. There's no most active chat. Okay, yes, sorry, right. Just catching up there on some bit of admin. Right, hello all. Welcome to this live stream, live consumer price index. We're going to be doing these regularly now here on the channel for the big news events. So make sure that you are subscribed, of course, to the channel. That way you'll be notified when we do go live. So who's in the chat? We've got Silent Mind, who's trying drastically to get the most active participant. There's no prize for that today. Conroy Jones, good to see you and good to catch up. We had a one-on-one chat in the week. Good to meet you. Sounds like you've got something really good going there, so I'm looking forward to seeing your progress. So good to see you. Welcome to the stream. Everyone's welcome here today. If you're not used to what we do, basically we'll talk a little bit about the number. Often it's non-farm payroll, but we're talking a little bit about the number today, CPI. Then we'll jump on to the charts, and then we'll see how markets react. I think it's quite an important one this month, and I'll talk about that more in a moment. But just for turning up, we've got something a little extra for you this month. We are going to do a consumer price index prize quiz. Okay, so let me tell you how that is going to work. We're going to give away three $12,500 prop challenges. Okay, this isn't going to be randomly selected this time. This isn't going to be for the most active in the chat, although we do encourage active participation in the chat. But basically we're going to have a little quiz. So at 20 past the hour, I'm going to ask three questions. Okay, three questions, and then you will have the chance to leave your answers to these three questions. And at about 40 minutes past the hour, I will close the quiz, and we will then reveal the answers. So there's three questions. Those that get all three answers, the first one to get there in with all three answers, obviously the first three will win. If there's only if there's only two answers achieved, then of course that's the nearest wins. But they're not difficult questions. Okay, they're not difficult questions, and also over the next 15 minutes or so, when I talk a little bit about CPI, the answers to my questions will be in there. I'm going to talk a little bit about CPI, and so I'm going to reveal basically under covert the actual answers to these questions. So just make sure you pay attention to what I am saying over the next 15 minutes or so. So quite exciting. Good chance for you to win an assessment account, a challenge account. As always, this stream is purely meant for entertainment and education purposes. Please don't follow any of the guidelines or any of the trade ideas that I put out. I've got a bit of a bias at the moment myself regarding the dollar. Doesn't make my bias correct. As you all know, I'm sure you've seen before, it's $7 trillion a day market. What do I know? So I'm going to give obviously my opinions on certain levels and so forth, but it's purely meant for education purposes. Do not trade on the back of what I say. As any of you will know or should know by now, if you're trading for any length of time, trading isn't all about one trade, isn't all about one idea. It's basically how you perform technically and of course emotionally over the course of the long term. What happens in the next 30 minutes is not going to make a dot of difference in terms of P&L to your trading account in the next 30 minutes. Hopefully you might learn something from it. Anyway, okay, so we got who else we got in the room? We got Noman's in the house, X Max in the house. Good to see you there. We got, I can't unfortunately I'm not able to read your name, but welcome anyway. We've got who else we got? We've got Silent Mind, I think I've mentioned, and Hello Means. We got you in the house as well. So welcome. Mr. Silent will absolutely follow your analysis. Good, sir. Right, okay. Right, CPI. Basically, CPI, as you know, well, Consumer Price Index, it's basically released every month. It really is just really the inflation number. Now, it's not the main measure of inflation that the government, or the Fed, I should say, rely on when they're setting their interest rates. They actually rely on something called the PCE, which is the Personal Consumption Expenditure. But nonetheless, CPI is a main measure of inflation. All the central banks around the world look at their CPI number because it basically is inflation. It's basically the measure of the prices of goods and services that are paid by consumers, over the last year, over the last month, and over the last year. So we release monthly figures and yearly figures. It's basically, the increase or decrease in consumers, whatever they're spending on goods and services. And obviously a high number means prices are going up, a low number means prices are going down. Why is it important? Well, it's important because the central banks around the world have basically two mandates generally. Two mandates. One mandate is to have maximum employment, basically get everyone back to work. And the other mandate that a central bank will have is to control inflation, basically CPI. And they control inflation in a number of ways, but the main way they control inflation is by moving interest rates. It's all in the news at the moment, and I'll talk about that in a second, but they move basically interest rates. They mandated to keep inflation in and around 2%. You can see here on the screen, the current year-on-year inflation rate is, well, last month it was at 2.4%, and this month they're expecting inflation to tick up to 2.6%, an increase in prices. You'll see here on the screen, there's actually two sort of measures of inflation that will be released at the bottom of now. You've got core CPI and you've got the regular CPI. The core CPI is actually most probably more accurate. The core basically takes out those volatile components of inflation, like food and energy. So it basically strips those out because they are quite volatile, and it's not necessarily the best measure of the overall inflation number. So a lot of the analysts, the central banks, they look at the core number maybe over and above the regular number. You've got energy, oil going up and down like a yo-yo with all the wars going around and missiles flying and so forth. So oil being a very volatile component, they take that out of the equation. Obviously, also food as well. You've got the wars in Ukraine, Russia, which Ukraine's a big sort of wheat producing continent country, and of course, we've got volatile food prices due to other factors such as that, weather, of course, as well, for agricultural crops and so forth. So it basically strips out all that. So we're expecting the inflation rate for core inflation to come in at up 0.3, again an uptick, and the month-on-month regular CPI expected to come in at 0.3. In fact, they're both likely to come in at the same. But importantly, it is showing here that inflation is likely to have ticked up. Now, if anyone follows the economics at all, they will no doubt be aware that we've had Trump basically imposing tariffs around the world. This is why the inflation number is likely to have ticked up. And certainly if you follow what Fed Chair Powell has been saying, he's basically predicted that inflation will tick up in the summer, which is where we are now, before inflation starts to fall off towards the end of the year. So this increase in inflation has been expected. If you look at the dollar over the last 3 weeks, the dollar is actually on a 3-week high, having been down about 10% since the beginning of the year, but it's actually up about 1.5 or 1.2% in the last 3 weeks. So this is basically on the back of the market believing the interest rates will be kept higher for longer. And the other thing you wouldn't have helped notice is the fact President Trump is putting an immense amount of pressure to get rid of Fed Chair Powell, the Fed governor, the Fed president, I should say. Okay, he thinks that the Powell, the Fed, should have been cutting interest rates for much much quicker than that we have seen at the moment. And of course, they want to get interest rates down because it spurs the economy and it makes basically the government debt cheaper. And, the US have got massive debt and about to go into much more massive debt with this big, beautiful bill. So obviously, Trump wants lower interest rates like most central banks, really, like most governments, really. So he's been basically putting the pressure on Powell to cut interest rates or get out of work. You're fired, as he used to say. So this is quite an important one. As I say, the numbers are looking quite a little bit up from last month. I just want to pull up this window, which I talk about a number of times on our live streams. I know some of you are here for the first time, but again, this is meant for education as well as a bit of fun, and as well as maybe hopefully giving you an insight on how to actually make some money in this crazy world of day trading. This is basically the FedWatch tool. You can get this free. We're not affiliated with them at all here at FTP. It's just something that I use, and I know a lot of analysts use it as well. It's basically showing us what the Fed fund futures are doing in terms of their interest rate prediction on interest rates. So if you look here, if you follow my mouse, okay, current interest rates are at 4.25 to 4.5. If you look up here, it tells you the next Fed meeting. The next Fed meeting is expected on the 30th of July, which is just at the end of the month. And this is showing us that there's a 95% chance that rates will still be, remember, follow my mouse, will still be at 4.25 at that meeting. So very unlikely that they will be cutting interest rates. So we're basically expecting that to remain unchanged. But if you take it out to, say, the 17th of September, now there's a 59% chance that interest rates will start to be cut. This is the one we want to look at. Is this going to rise over this CPI announcement, in which case the likelihood of interest rates being cut will increase? Well, it will rise if if CPI comes in less than expected. Okay, so obviously less than expected means prices are coming down. And us as people, just individuals, we should be looking at this number. Inflation is an important number because it basically tells us what we're paying for our goods and services. If we are earning and every month or so, or every year we get a pay rise. Well, that's great. You're getting a pay rise. You might get 5% pay rise or something. But if inflation's running at say 7% and prices are going up, you're not actually getting a pay rise. You're actually becoming worse off, aren't you? Because inflation is pushing up. So inflation is really important for everyone, let alone just the central banks. So this is why we need to look at this. Our interest rates going to be coming down on the back of the inflation number. If you take it out now to December, at the end of the year, the actual market, the market is now pricing, is pricing in almost a 70% chance that there's going to be a total of 50 basis point cut by the end of the year. This will increase massively if the numbers today are lower than expected. So that's basically why we're interested in the numbers. That's why the economy is basically interested in the numbers. And the other, so that's basically what we'll be looking at. So this is basically what's been happening. I was looking at the FTSE earlier, but this is basically what's been happening to the dollar in the last couple of months. And I'm sure if you've been following the markets, you will be aware of this. This is the dollar index. This is what the dollar. This is a basket of currencies, 6 currencies, showing you dollar strength. Dollar has been in steady decline since the beginning of the year, basically. What's that? That is January of this year. And you'll see January of this year, the dollar was actually down around 12.5%. But in the last couple of months, a couple of weeks, I should say, 3 weeks, in fact, the dollar has shown an increase, expecting rates to stay higher than longer. And I think the numbers will come in stronger. Okay, this is my prediction now. Okay, this is just my prediction. The numbers will come in pretty much in line with expectations. And I showed you what the expectations were a while ago, 2.6 year on year. And the natural thing for the market to do is for the dollar to push on, to gather some strength. But I think there are some real headwinds coming in for the US dollar. Not only the mounting pressure of President Trump over Powell, to get rid of him, but I think also, the tariff inflation number story is transitory. When I say transitory, it means it will fade away. And he likes doing deals. So I think ultimately the inflation number is expected to pick up. That's why we're seeing it at the moment. But the interest rate cutting cycle thought of an interest rate cutting cycle will prevail, and that the dollar will come and resume its downward pressure. So 2 things. For me, looking at the most actively traded currency pair, clearly it's the euro against the US dollar. It accounts for, the US dollar accounts for 88% of all FX, and the euro is about 35% of all FX. It's fair to say that the euro dollar is the most actively traded currency. That followed by the Japanese yen, and then followed by the British pound, and the rest, oddly enough, is all pretty much insignificant. So this is what I'm thinking. Obviously, if this comes down, this is the euro. So this is the base currency, is the first currency in the quote. Second currency is the quote currency. If this comes down, it basically means the US dollar is getting stronger. So I'm expecting a strong number. The short-term traders are going to start buying the US dollar, but they're buying it into what I think is a significant level. Remember, if they're buying the US dollar, that basically means this comes down. And I think this is going to come down potentially to a decent level of support. So I would basically be looking to sell dollar strength, selling dollar strength by buying the euro dollar. If you're buying the euro dollar, basically means you're buying the euro and selling the dollar. If the dollar gets stronger, this is going to come into this level, in which case I think you're looking maybe to be able to sell into strength by buying this currency pair in and around that level. And I would assume that below 1.16, there's going to be a significant amount of institutional buying there as well, because the institutions, the big money, isn't looking at one read of the CPI. This type of move you've seen in the 13% move in the world's #1 currency. This isn't you and I on our MT5 platforms buying this, right? It's not you and I buying this on our prop accounts that's moving this higher. What's moving this higher is the big money, the big banks, the hedge funds, the pension funds. That's what's moving this higher. And I believe that the whole sort of low dollar bias isn't going to go away because of 1 week's CPI, which has been preempted. We're expecting an uptick, but I think you are going to see some short-term buying of dollar on the back of the numbers. Right. Okay. So now we're going to do our little quiz. Okay. So I've got 3 questions. What's the giveaway, team? Divash, you've just come in at the right time. So here are the 3 questions that we're going to ask today. Okay, so question time. Remember, I'm giving away 3 $12,500 assessments, and the people that get all 3 right, the first one to get them gets the prize. If no one gets all 3 right, then we'll go down to those that got 2 right, and the first 3 that got in there wins. So don't delay. So the first question, we're keeping this simple. I have covered the answers in the last 15 minutes of my little speak. What does the consumer price index measure? Now we're going to put on a Glean form here in the chat. I think it's going to come up in a moment. This is where you do your entry, Okay, so do your entry in there. You need to leave your email address, your correct email address. Don't point leaving, a fake email address just to get read into the competition. I think we all have fake email addresses for certain things. But if you use a fake email address, then obviously we won't be able to contact you. So it doesn't count. And by the way, I'm going to have to delete the. Can we just delete those people that put the question answers in here? They're clearly not listening to me. So can we just delete anyone that puts in? And I will tell you now, the inflation is the wrong answer. But if you put your answers in here, you won't be qualified for the competition. Simple as that. Oh gosh, look at people. Can you delete these messages back, team? I didn't realize that people are not going to listen to what I'm saying. Golly gosh. Right, just delete the answers when they come in. You've got to get your answers on the Glean form that comes in. Yep. Let's see what's going on there. I'm just checking out where this form is. We're supposed to see the form here now so that you can get your answers in. I'm not going to do the answers here on the screen. I won't relieve the next question until the Glean form comes up. Okay. So I don't know if people can hear me, but don't put your answers in the chat. I'll say it one more time for those that are not native speaking English. Do not put the answers in the chat. It won't count and it will disqualify you. Got it? Let's move on. Right. The form is above you, Ellie, just there. The Glean form is above you. Right, so we'll ignore the first question. And I don't see anyone that got the question right, by the way, just by chatting out inflation. I want to know what it's actually measuring. What does inflation mean? So that is not the correct answer. Inflation is not the correct answer. It's what it's actually measuring. What does inflation measure? Yeah. What's the inflation measure? Yeah. Okay. So to the next question, please get this on the Glean form. You've got about 6 minutes before we have the release of the data. Next question. If wages increase by 3% and the consumer price increases by 5%, what happens to real income? Yeah. What happens to real income? Okay, so that is the second question. It looks as though people might now be listening to me, which is good. Get the answer on the Glean form. I was at my school reunion on last Thursday, my old school reunion, which I haven't seen some people there for, about 45 years. Everyone's old and bald and grey and what have you. But it's going back to school. I feel like I'm back at school now, teaching people. And everyone's putting their hand up, don't put your answers, don't get your hand up, stick it on your form. Well done. Well done. Get it on the form. Right. This is serious business. We're giving away $12,500 here in assessment accounts. Question number 3. What is the difference between headline CPI and core CPI? Get it on the form. Don't put it in the chat. I'm not going to say it again. So what's the difference between headline CPI and core CPI? I have covered all that in our little chat a moment ago. Right. So there you have it. I'm just going to check my score. It seems to have gone very quiet in the last few minutes. So make sure he's coming through. Now, what's going to happen is you'll hear the answer. Basically, I'll take this off the screen. I'll get back on to the charts. What I will do, just to make life a little bit easier for you, is I'll just drop the questions below, which will be there for the next 10 or 15 minutes or so. So what's going to happen is you'll hear the answer, the result of the CPI come out over my squawk in about 4 minutes time. But clearly there is a slight time delay depending on where you are in the world because of internet speeds and so forth. So don't believe that you've heard the news first here, because if you hear it here, it's basically well in the market by maybe 10 seconds. So there you are. Spring King, fine, you've done. Each question answered, each one person win, right? You need all 3 questions to win. If no one gets all 3 questions right, then it'll go down to who got the most questions right. So that's basically how it works. Okay, so 3 questions. The ones that get 3 questions right, obviously, are first up the picking list. So there you have it. Okay, so this is the euro dollar. Also looking at, well, looking at all. I mean, at the moment, obviously. Okay, look just briefly on the before we have this release in a couple of minutes. If you look what's been going on with the stock markets as of, well, today, since I've been alive, which is quite a few decades, it feels like centuries, but quite a few decades, the stock market's never been higher than it was today. This is at all-time highs in the stock markets. That's basically for everything. And this is in an environment where interest rates are obviously high, but expected to fall. If this number comes in lower than expected, 2.4, if it comes in at 2.4, this is going to rocket higher. I would have thought, because it basically means interest rates are going to be cut, and then we're going to see this push higher. But where do I pick? Where do I pick my next target level? Well, the only target I've really got is what's basically been happening in this indecision period. I love 100% extension. If it breaks higher, that is your next level of resistance at 6,370. That's our next level that we can expect. Stock markets will go higher on low numbers. If the numbers are high, 2.5, 2.6, 2.7, stock markets are going to pull back. Stock markets will have a momentarily rejection, and they might reject basically down to maybe, well, I think this would be your interesting buying level. Anything between here and the base of this indecision period, which is 6.2 down to 6.150. This zone here, I think, would be a satisfactory buying zone on the back of same way that we're going to fade dollar strength, same way that you buy into stock market weakness on a strong number, buying into this zone, and your stops are going to be below this significant level of resistance, which comes in there. This squawk is not working, so I'm gonna have to rely on Bloomberg for my results. Unless I just do a quick refresh.
Voice use this.
There we go. So the numbers are going to be coming out in about 45 seconds. In my experience, generally speaking, the CPI, they do seem to get that quite right in their estimations. So there you go. Let's have a look here. Right.
The opening ballot is 60 minutes away. We're seconds away from inflation data, which may dictate how
Yep. We'll have a look at gold.
Equity futures positive by 0.25% on the S&P 500. On the Nasdaq 100 up by 0.5. Turn to the bond market. The scores in fixed income.
Okay, yeah. So we're expecting to see higher numbers. Comes in at 3%. That's Canadian. 3.6 is the number in line.
John, we've got an upside surprise here that kind of makes a little hash of perhaps the Treasury Secretary's claim that inflation hasn't hit yet. CPI comes in up 0.3%.
3%. Sorry, I beg your pardon. 3%. That is a strong number.
Just 0.2%.
So this is what we said. You're going to expect to see now the dollar gain some strength.
Which is higher than the anticipated 2.6%. It's a 0.3% move up from last month, and the core is at 2.9%.
Dollar's not reacting. Dollar is simply not reacting.
It was 2.8%. Let me just quickly mention Empire Manufacturing goes up 22 points to a positive.
So the core CPI, which is obviously the ones that removes those volatile numbers, volatile things, basically comes in at 2.9% as well. So this is a miss to the upside. Ordinarily, you would expect to see the dollar gain on this. Gain with that basically meaning the euro dollar would fall. The euro dollar is now basically trading higher.
In America, 5 consecutive months, all the talk of higher prices, it's just not coming through. Not yet, you might say, but it's not here this morning, not at the headline, and not in core. Core CPI, 0.2%. The expectation in our survey, the estimate, 0.3%.
Okay, so core CPI, 0.2%. Okay, so this is interesting. The month-on-month figures come in lower than expected. The year-on-year figures come in higher than expected. So the month-on-month figures, obviously, what the markets are looking here at the moment, and that's why the dollar is it's trading flat. Just take it down to the 1 minute chart. See what's happened over the announcement. Yeah, slight dollar weakness, 66 to 82. So slight dollar weakness on the month-on-month figure, showing prices are not coming through as strong as expected. So the dollar is weakening up. Well, my call really at the beginning of this was to sell dollar on a strength, but selling dollar anyway, I think, is the way to go. General bias, so don't go and just sell it now or buy the euro dollar now, but that is general theme of it. And you look at the big institutional play. Well, that hasn't changed, has it? The institutional money has been selling the dollar all year, and I don't think that's necessarily going to derail from here. I wouldn't be surprised. I'm not trading this. It doesn't fit my strategy. I want to buy trend on a pullback, and I haven't got it here. What I might see here, it's not. I'm trying to find my strategy. I trade two strategies. One's trend continuation and one trend reversal. Trend reversal on the higher time frame charts where you see a break of previous structure. But here at the moment, you're seeing lower highs and lower lows. So this is definitely a trend. The trend following would sell into this. And that's basically buying the dollar. And you could, there's definitely a case for that as it falls back into this zone. This is your boomerang trend zone. Okay, so you're looking for the previous structure. I would be sometimes difficult to get the fundamentals in here, but this is most probably going to be the level that holds it. And if you are selling it here, then stops above 17.20, 50 pip stop, something like that would mostly be in order with the profit target back down here, where I would really like to be buying it at some point. But I think that'd be negative to gold. Gold's a funny one at the moment. Gold's been ranging, hasn't it? It's been really ranging. I think gold really now is sort of like a dollar play, if you like. Okay, a dollar play where you've got a weaker dollar. This weaker dollar that you've seen at the beginning of the year has led to, we talked about the dollar being down 13%. It's basically led to gold move. Gold for the beginning of the year. Excuse me. Gold since the beginning of the year is up 34%. Wow, just didn't as much as that. Gosh, I do have some gold ETFs. That's nice. So gold up 30%, dollar down 13%. Dollar weakness will prevail. Gold possibly trades higher. So buying into gold strength, gold weakness for me would be, I think, my play on that. And this type of thing as well. This type of 4-hour price action. Would you agree that this is most probably 50% retracement. So I'm looking for the break of this structure, break of this resistance at 36. This is silver, 36.60. This is silver, sorry. And a pull back into that with that pin bar. That's bullish for, bullish price action for silver. Gold's going to be pretty much the same, I think. Gold pulling back. This zone. I think gold support could be found around 3,350. Right. Gold. This isn't gold, so yeah. Sorry, I got that side. Yeah, I got that. Right. Okay. So on the back of that, we are going to close the competition now. Okay. So those are the questions. Make sure that Fidesz doesn't enter into the competition because he's put it in the chat. I don't know how many people listen to me or not. So we'll close that off now, and my team can get to work behind the scenes if they're listening in to tell me if we had any winners, and if we and what the correct answers are. Okay, so let's just pull that back up. The questions, I think, were quite simple because I covered them in the main chat beforehand. And of course, everyone can Google it, ChatGPT it, Forex Factory it. So that's no problem. But we want to make sure that people are obviously putting in some effort rather than just giving it away. So let's have a look then at the correct answers. Okay, right. I've got 3 winners already. Here are the answers to the questions. The first question was, what does consumer price index measure? A lot of you just said inflation. That's just another name for it. Doesn't mean it measures inflation. What it actually measures is the change. This is the answer I was looking for. The change in price of goods and services purchased by consumers. It's a basic measure of inflation. Okay, so that's basically what we were looking for, something along those lines. And I think we had quite a few getting that right as well. A lot of people did put out inflation. I'm told now that we are accepting inflation as an answer. That's fine. It's a basic measure of inflation, which is the prices of goods and services. So that's good. We are accepting the inflation answer. But of course, everyone chucked it into the main chat, which is a little bit disappointing. Number 2, if wages increase by 3% and CPI, inflation, increases by 5%, what happens to real income? Real income will be lower. Basically, it falls if CPI, inflation, comes in higher, basically because your spending power decreases. So basically, you will be earning less in real terms because everything you need to buy has gone up. So that's the answer we are looking for. We had quite a few getting that correct as well. So basically, your real income will be lower. Next and final question. What is the difference between headline CPI and core CPI? Headline and core CPI, the main measure that the central banks look at is the core CPI. Why do they look at that? Well, they look at that because the core takes out the volatile components like food and energy. So we've got 3 winners, and I'm just going to get them now into my broadcasting software, and we will let you know who it is. Bear with me a moment. And we will get away with it. So let's have a look. I'll put this on the ticker, I guess. Right, okay. So our three winners of $12,500 each goes to, boom, there you go, George Van Bijon Nazarg and Ola Hunchar. So congratulations to you three traders. You've won yourself a $12,500 assessment account in the competition. So well done to you for getting all that right. Congratulations. They got all three answers correct, and you were the first. So I understand we got quite a few correct answers, but you were the first three. So well done for you. Well done indeed. Well, we got Mr. Silence says, my name is Soulmate. Hi, Soulmate. How are you doing? We've got there we go. There we go. Those are the winners today. Do we find this fun? Is it worth doing this again? Or would you rather I just do a random giveaway? I think this is much more useful for everyone, isn't it? Make sure you listen to what I am saying. Olaire, I think you've been around, Olaire, for quite a few streams, haven't you? You've been following me for quite a long time on these streams. So finally, you've won something. Vanar is saying, who won the game? I mean, I don't know what he's doing, if he's looking at the screen or not. FTP. Good stuff. You love FTP. There you are. Those are our winners, and you'll be emailed shortly. Edward Overhaul. Did you get the answers right, Edward? Did you get them right? I don't see all the answers myself. I'll look at them later. But my team behind me obviously are working this out. Simon, what about you? Did you enter? Did you get all the questions right? I think you won something for the other week, didn't you, with us? Hopefully that counts doing well. Hopefully so. As I say, I don't think much is going on in the markets. I think here we go. Okay, so we've got gold now pulling back down into support zone potentially. Looking at the euro dollar. Euro dollar is basically continued now. It's down next. You had that pullback into the sort of previous structure, the sort of liquidity area, if you like, and rolling back. This is actually quite bearish. I would be looking to pick up something back down here if my boomerang reversal allows me to. I would assume there's institutional interest below 1.16 just by looking at the price action. So once we get back down to here, if I can see a boomerang reversal, which, as you know, is something that looks like this, we're making lower lows and lower highs and lower lows. And then you have this one and pull back, and it doesn't make a new low, and it trades back up through the high that led to the failed swing low. That is reversal. If I see this pattern down in here, I'm going to be looking to take some long euro dollar fading dollar, fading the US dollar. So that's what I'll be looking to do. All right, folks, I will leave that there for now. Just quick update. On Thursday, a couple of days' time, I'm going to be a couple of days' time, I'm going to be doing a webinar, a free webinar, where we literally have a fantastic giveaway. Okay, I'm not going to talk about it now. You've got to come and join me in the webinar. But even if you don't just come away for the giveaway, basically, I'm going to lift the hood. Okay, I'm going to lift the hood to some quant analysis that we've done over the last few months, over the last 3 years. I haven't obviously been here for three years, but they've been going for almost 4 years now. So we basically looked at 4 years worth of data. 16 million prop trades have gone through the accounts here at FTP. And we are in a privileged position because we know what the successful traders are doing. Okay, we know what basically the failure accounts are generally doing. So I don't know if any other prop firm does this, but I'm going to share with you the data of all our accounts. We basically had a risk team, quant guys looking at all this, and obviously we need to have a risk team anyway when you're managing a prop firm. And I'm going to tell you what the winning accounts are doing. Now, doesn't mean you've got to copy them, but I always say, if you want to be successful, why not try and emulate traders that are successful? I'm not talking about copying trade signals which don't work in the long haul. I'm talking about what they generally do in terms of the characteristics of their trading habits. So I'm going to be lifting the hood behind what the successful traders are doing. So get yourself registered for this. Okay, we'll be doing this on Thursday evening, and that will be at 7 p.m. UK time. We'll link. I think we're going to send a link out in a moment. So we'll be putting out a link here now. You can get yourself registered for that, or you can obviously drop on to the website FTP fundingtradingplus.com, and that will come a pop-up where you can get registered as well. But there will be a link coming up here very soon where you can get registered. But if you don't see that link, if you go over to the website, our website, okay, this is our website here, okay. If you go to the bottom left here, Prop IQ sign up, and you can sign yourself up using that there. Okay, so click in, will take you straight through. But I think we've just popped it into the chat now. But if you don't have that, or you're running out, or you're on your phone and you're just in a business meeting or something like that, and you want to do it later, head over to the website and you can do it from there as well. But I look forward to seeing you in there. I think you are going to be pretty amazed at some of the data I'm going to share. And some of you may equally be amazed with the opportunity that I'm going to offer those that attend as well. So there you have it. Right, thanks indeed for all showing up. I sort of kind of knew that CPI, it's not normally a massive market mover on the moment. It's announced, but it does normally set the tone going forward. And if there's any bias for me on the tone, it's that interest rates, and the pressure of Trump and so forth, and the pressure of tariffs becoming maybe less, interest rates are maybe set to start moving at some point sooner, maybe rather than later, which is why the US dollar could reverse its 3-week rally and continue its down move, which has basically been pushed there by the big institutions over the last 6 months or so. So there you have it. Thanks indeed for tuning in, and thanks all for your participation, and we'll see you very soon. I will be, for what it's worth, streaming with another giveaway, the ECB, the European Central Bank, whenever that's coming out. I think it's next week, So we'll be doing the ECB with another giveaway. So make sure you sign up, register, subscribe to the channel, tell your mates about it all, and we'll do that again next week for another giveaway, which is always quite good fun. And there's of course, we do the non-farm payroll as well, which is on the 1st of August, which is 2 weeks and a bit time. All right, guys and girls, thanks for showing up, and we'll see you next time.